Welcome back. Well, there's a bit of a recovery from the lowest point of the trading session. At least we've managed to defend 19,500 for now. It's a Metro Brands which is perking up against technology on account of that tie-up that they have done in Telangana to set up a semiconductor factory. That's also doing okay. And then there is a perk up on SBFC Finance as well. On the losing side, it continues to be Utkarsh Small Finance Bank, which is down 7.25%. Adani Group of companies is coming under pressure. So apart from Adani Ports that we have been highlighting, Adani Power is also down 6%. And look at that cut on Bank of Maharashtra, 6% shaved off now. UCO Bank, IOB, Punjab Sind Bank, Central Bank. So the pressure on the PSU banking names is actually getting deeper as we speak. In fact, Vinit, what's your take as far as the PSU banking names is concerned? Because of course, Vinit Bolinjkar, the head of research of Ventura Securities, joins us on the show. Vinit, let's begin by discussing PSU banking names.
In the last run-up, they were the ones that had outperformed the most, and now I think there is a correction taking place. Profit booking is happening, and because of that, we are seeing some downticks in these stocks. But I believe that once this event is over with the episode in the Middle East, I think the flavor will come back into these stocks. So if you have this stock, continue to hold on to it. And as the market settles and finds its bottom, whenever it is formed over the next couple of weeks, is the time when we should be looking to enter these stocks.
The Adani Group of stocks, Vinit, will you buy this dip?
See, what has happened is Haifa Port was a crucial cog in the wheel of Adani Ports. And we all know that the Adani Group is into infrastructure. So, debt is a large part of their program. So that stock is taking a hit because of that, because the uncertainty is created with the Middle East tensions. But apart from that, I believe that the other stocks offer a good window of opportunity. Having said that, we have the Hindenburg report SE hearing on the 13th of October. So we might as well wait until that time elapses to take any fresh exposure to Adani stocks.
Okay, wait till you take any fresh exposure to the Adani names. Let me quickly take it across to Sharad as well and get in some chatter about what's being discussed across dealing rooms. He will just join in just seconds from now. And I think there was some news flow coming in Bajaj Finance as well, which of course has been a very, very steady ship all through last week too. Today, of course, it's seeing a bit of a dip, about 1.5% or so. Kunal, specifically on Bajaj Finance and the kind of strength that it's seen, makes sense to buy on dips?
Yeah, it makes sense to buy the stock even at current levels because the news flow for the stock has been positive. The price action for the stock has been very encouraging. It's not participated in the market volatility at all over the last a couple of weeks, as well as over the last 1 month or so for the indices. Even the stock has outperformed its immediate peer Bajaj Finserv by a margin of more than 10%. The stock has made a fresh high for itself. So I think that kind of a mixture is very rare to get into these kind of market. In case if the stock gets into a mild kind of a correction, I don't expect a major correction which could probably happen into the stock unless the market gets into a sharper degree of correction. I believe that should be taken as a good advantage in terms of buying. Like for example, today the stock is down 1.5% and from a high which I think the stock had made of 81.80 or 81.85 levels on Friday. I think this could be a good entry point. So a retracement of 150 odd points is generally considered to be a good entry point for a stock like Bajaj Finance.
Okay, that's the take coming in on Bajaj Finance and Trade. Of course, it's MCX, which continues to be lively. There's TVS Motors as well, which is picking up. LTTS is not looking bad. Metropolis after its second quarter update. And then Delta Corp, the curious case as it may be, that's spiking up about 2.5% or so. Vinit, do you believe there's any contra bet to be made here on Delta Corp?
No, I think the issues around the GST payments, if they are not settled, then virtually threatens the viability of the. So it's better to just stay away from these counters and look at these stocks only when the clarity is received.
In fact, since we're talking about Delta Corp, let's pull up some of the price volume buzzers as well, because Delta Corp features in that list because it's shown a breakout from the three-session consolidation pattern. It's traded in an oversold region as per the RSI indicator. There was a bit of a breakout earlier. Now it's a bit tempered down with a gain of almost 3%. You also have GMR Infrastructure, which has formed a bearish belt hold candlestick pattern, trades near the lower range of the consolidation as well. In Punjab National Bank, it's been declining for the fourth consecutive session. It's formed a bearish belt hold candlestick pattern as well. Kush, from the names that I pointed out, GMR Infrastructure, PNB, Delta Corp, is there any bet that you would like to take, or even other PSU banking names?
Well, first up, I think you're putting I and Kunal's job at risk here, with the with all the kind of detailed analysis that you've given. But that was, very interesting. See, one stock that's coming on my radar, among the names that you've mentioned, is GMR, Infra, purely for the reason that this is still holding on to its supports. The couple of other names, PNB, Delta Corp, that you mentioned, although Delta Corp is in a bit of a green territory. The recent action has not really been encouraging, and as Vinit said, the news flow continues to be a little bleak here. So until clarity emerges, I would avoid that. PNB also is trailing below its support zones. Now GMR Infra, despite the kind of cuts that we're seeing today, is trading very close to its support zones. It's taken support at its 50-day moving average. These 58 kind of levels have held on before as well. So this is one stock that I would have on my radar. I won't be in a hurry to sort of go out and buy this dip yet, because if this support sort of breaches, then we're looking at 52, 55 kind of levels. But among the names that you mentioned, this is one stock that I would have on my radar. If 58 of hold on, then don't be surprised to see a move up until 61 and 63 kind of levels. So Delta Corp and PNB I would avoid. GMR I would have on my list, but as I said, I wouldn't jump the gun, and buy it right away.
Point taken. In the meantime, let's also go across to my colleague Sharad. He's standing by to tell us the latest chatter in the dealing rooms. Hi, Sharad.
Well, yes, in focus we're having Vijaya Diagnostics, and what we're hearing from the dealers is a buying seen from a couple of DIs in this trading counters in the day's trade. Now do remember the volumes also of the stock has picked up almost 6 times its 20-day average, and the DIs already invested in the company. They include the likes of Nippon Mutual Fund, Axis Mutual Fund, holding roughly between 5 to 9% stake in the company. Now the important thing about the diagnostic space is what the channel checks are suggesting is that the diagnostics are actually focusing on the higher margin products going ahead. And today in the morning itself, Metropolis Healthcare also came out with a strong numbers, and they have stated, especially on the operational front, that the margins are expected to increase sequentially. And because of channel checks, it suggested that the overall pricing pressure which was seeing in the industry over the last 2 to 3 years, that has started to bottom out, and certain price hikes have also been undertaken in certain categories. That's what the channel checks are suggesting. So it's expected that the Q2 numbers, at least on the sequential basis when it comes to the margins, will be strong for the diagnostic companies as well. And most importantly, in Vijaya Diagnostics, a couple of DIs have been buying the stake over the last 2 trading sessions.
Vijay Diagnostics, that's the one stock which is holding out in trade, as is Metropolis actually. About a 2.25% bump up is what you're seeing right now. Vinit, any sign of a revival in any of these diagnostic names?
Yes, so we have been hearing that the price cuts which have been taken by the digital players has kind of subsided. And now with everyone's market shares kind of stable in the business, we can resume the growth story. And it is creditable to mention that, the growth of this sector is expected to be around 10 to 15% long term, which is a very, very good growth trigger. And Metropolis having a very, very strong brand name in the Western and Western markets particularly, I think should do well. So along with the Lalpath Labs, Metropolis are 2 names that we think that feature prominently in this space.
From you on the broader pharma and healthcare space, but before that, let me get the technical view on the BTSC trades. Kush, you go first. What's the buy today, sell tomorrow idea?
TCS has to feature, as one of the trades, doesn't it? So TCS holding on to its gains and looking strong from here as well. I'd suggest a target of 36.80 and 37.25 on TCS. 35.75 is where I would place my stop loss. The second pick is also one of the winners of the day, which is TVS Motors. If you see, this stock also is respecting its 20-day moving average, taking support and a fairly evident relative strength here. So 1560, 1590 are the levels that I'm looking for. 1500 is where I would place my stop loss. So TCS and TVS Motors, these two would be my BTST picks.
Right. Kunal, what about your BTST ideas?
So that'll be first Aban, Bector Foods. That stock is showing signs of a recovery yet again after a mild bit of correction the stock had seen previous month. So would suggest a buy with a target of 1100, stop loss at 1025. And Ipca Labs is also the other stock which is inching towards a breakout. It's a flag pattern formation on the daily time frame, trading at 940 approximately. Would suggest a buy with a target of 970, stop loss at 924.
Okay, some BTST ideas coming in there from both Kunal as well as Kush. Kush, just looking at the market temperament right now, what do you think is in store for us? I mean, the US futures are not really hinting towards a savage cut or anything to start off trade, but we seem pretty brittle around that 19,500 mark. You think a breach is inevitable in the days to come?
Aisha, on the contrary, in fact, I look at this as a silver lining. I mentioned this at the start of the show as well, that the fact that we're holding on to 19,500 is extremely encouraging. Also, if you see the put option setup, that we're seeing, we've practically doubled the kind of put option base that we had, on Friday around the same, 19,500 mark, perhaps added, 50% or so. So this should, hold on unless any further, bad news comes in from the, global front. I think this should hold on, and this could perhaps be a near-term bottom. If anywhere the IT stock starts, giving out results, at least, even if they're in line, then I think, we're looking at 19,800 kind of levels, which will be the first, sign or the first test for, the rally that will come on the upside. Also, as far as the Dow futures go, you're right, it's not a big scare, 100 points down. But if I remember correctly, when we started the day, early, then 200 points, that's what the cut on the Dow was. So in fact, we've seen a bit of a recovery there as well. So I'm looking at all of this as a silver lining. And, if I talk as a pure, technical analyst, a technical guy here, even if I take the news flow out, for me, till October 11th, 19,500 to 19,300 was the zone where Nifty was going to consolidate anyway. And as I said, the news aside, we're looking at precisely that kind of action. Now, some of these things are actually, from my perspective, auguring well for the market. This dip perhaps will probably be a buying opportunity. As I said, the only caveat being we don't see a major, a major negative news flow coming from the geopolitical front.
Okay, so despite the news flow, you were maintaining the stance for consolidation in any case, but you can't ignore the news flow completely because that's what, of course, is making the global headlines. But my colleague Sharad has actually done some number crunching as to what has been the impact of such wars on the Indian markets. And more often than not, the Indian markets have managed to decouple themselves, shrug off these global concerns and managed to show a decent recovery and outperformance. Sharad, isn't that the case?
Well, yes, most importantly, the long-term impact. There is no such impact of any war, and we have taken the data over the last 30 years. Now, look at the Gulf War. When it had started, the Sensex was at roughly 1,100 points, and after that, the war ended, but still, Sensex went up almost 11%. Also, we have war on terror, which actually lasted 20 years. During this time, Sensex went up as high as 19 times. And also the current war, which is happening between Russia and Ukraine, if you look at that Sensex level, that is still up almost 3.2 times, and the war is still under progress. Also, let's look at the last 3 times when the conflict was there between Israel and Palestine. And you can see there has been certain short-term aberrations which ranged between two sessions to roughly a week. But overall, you see the endings of the Sensex has been on the higher side as compared to the opening. And these are the last 3 important clashes in 2014, 2018 and 2021. But the impact stocks, what is the relation with India and Israel on the listed space? That is something to watch out for. Adani Ports, they had acquired Haifa Port earlier this year. And also a lot of defense companies have technical tie-ups going ahead, such as HAL, Bharat Dynamics, Bharat Forge. But there won't be any major impact on the revenues going ahead. And even Sun Pharma has a controlling stake in Israel's Taro, but do remember all the plants and the sales are happening in the American and the non-Israel areas. Also importantly, railway stocks would be in focus because of an important deal coming with the Middle Eastern corridor, which were supposed to give in more contracts. So this is just under the feasibility report, but because of the run-up seen in the railway stocks, there is correction being seen in the day's trade. And lastly, the stock which would be in focus would be CLM as well, which will actually supplies PCBs to Rafael.
Yeah, Sun Pharma is the other one, which is the impacted entity considering Taro, their subsidiary, and the kind of revenue share that they have from Taro as well. Although you've not seen much of a damage come in from Sun Pharma on Sun Pharma today, that's just been at best marginally soft as we speak right now. Aside of Adani Ports, of course, there's been Hero Motocorp that's plunged about 3% or so. There's M&M, which has fallen about 2%. And all this comes in the light of, the likes of Maruti already, getting into the festive season with a fair amount of discounts across their models as well. Vinit, what is your anticipation now for autos ahead of the festive season? And if indeed in the current market decline, we do see auto stocks fall as they are today, would they become only a buy once again or add?
Will do very well. It has got some good traction in the recent months. And, if you are, however, Maruti is not a play for the short run. If you're, if any trader would try to buy.
Okay, we seem to have snobbed that line. Let's just, take a look at what's happening right now with these auto names. They, of course, have fallen quite a fair bit. Maruti, the Nifty, by the way, look out for that because we're getting very close to that 19,500 print. M&M, of course, is the other drag as we speak right now. And let's check in on Tata Motors. That also should be in the red. It is down about 1%. But Vinit Bolinjkar is back with us. Vinit, you were completing your point on autos and how you do see a robust, festive demand ahead.
Demand is definitely going to be robust. And we believe that Maruti will be the outlier in this segment. Other stocks have already run up, and we think that Maruti will be a belated play. But over the next 2 years, we have a target of 14,000 on the stock, and that's how we are playing this.
Okay, so that's a take coming in. But since we're talking about the festive demand, the one space that has actually been doing quite okay for itself is the real estate pack. And look at the kind of updates that we have got recently, Vinith, whether a Prestige, a Lota and the other companies, Sobha, etc. as well. Seems like the flats are, selling off the shelf.
Actually, it's a very, very robust growth. And I believe that all the names that you have mentioned are going to see some very, very positive numbers coming in during the December quarter.
Okay, but any favorites within the pack from the real estate?
No, I'll go with the smaller companies who are more concentrated in the tier 2 and tier 3 towns. So one of the picks that comes to mind is Ashiana Housing.
Housing is one name that you're watching out for in the real estate pack. We were talking about the cues lined up for the Indian market. Of course, we'll have to see how the global headlines really pan out with respect to the Israel, Hamas war. But the other thing is, of course, the state assembly elections. We have the dates which have come out for those elections as well. And ahead of that, Vinny, do you expect maybe these infrastructure stocks or the waste management companies or the other companies which have some sort of dependence on government capex are likely to do better?
So, in the infrastructure space, especially the companies which are into the waste management and water management are going to do well because that is one common thread across all political parties that is going to play out in the years to come. So I believe that stocks in this space like EMS, which is a recently listed one, should do well, in my opinion.
Okay, that's the take coming in, and what could be the possible election plays in light of the assembly election schedule getting out today by the Election Commission. Just some of the other losers in trade, and we have seen some of the pressure points being the OMC names. So BPCL, for instance, has slid about almost 2%. SBI has fallen quite a fair bit, about 1.6% move coming in there. Bajaj Finance as well has taken a pause after the rally around, or rather pre as well as the post fundraising announcement coming by last week. Some of the private banking names, Kotak, HDFC Bank, they're taking it hard. ICICI Bank as well, lower by about 1%. Similar is the picture across Axis as well. L&T is down about 0.5% or so. And then you are seeing, weakness across the metal names too. Vinit, just wanted to understand what's your positioning now within banks, PSBs versus private banks, and especially in the light of underperformance from some of the large private banking names.
you, I keep repeating this, and at the sound of being repetitive, I would just like to say that, the differentiation between the businesses of the PSBs and private banks is kind of narrowed down. And PSBs are available at very, very attractive valuations compared to the private banks, while having the same growth and ROE metrics as those of the private banks. So I think the outperformance of the PSBs vis-a-vis private banks will uh, continue. And, I dare say that these stocks can turn out to be a bagger or two over the next 24 to 36 months.
So latest coming in as far as the public sector banks are concerned. Vinit says that despite the run-up that we have seen this year, the stocks are still available cheap versus their historic valuation. What else is happening in the market? It's an MCX which has given up most of its gain but still holding in the green. LTTS, Metropolis, Metro Brands, Avas, Delta Corp, Angel One. These are some of your big buzzers. But Vinit, today we are seeing a bit of reversal in some of the railway names as well. Call it the impact of the speculation around what's going to happen to that big corridor that was announced on account of on the sidelines of G20, or the fact that these stocks have run up quite a bit. What's your take on the railway and defense names right now? Should one buy the dips, or is it the time that one should just book the profits and maybe get out of a few names?
So I think buying the dip in defense stocks makes more sense than buying the dip in railway stocks. Uh, Primarily because defense is going to be a going concern, and in the short run, we are not sure how uh, the emerging geopolitics will take place in the aftermath of the Palestine-Israel conflict. So, given that kind of thing, I think the defense would be a better play to buy on dips than in the railway stocks.
Right. Okay, that's the take coming in, and some of the defense as well as shipyard names. In fact, Kush, wanted to get your sense in as well on, whether or not if there is a material decline in the defense names, that's to be bought.
I think I agree with Vinit here that these are still a structural player. Although you've seen a lot of them go into a consolidation mode, some of them even profit booking. But I think this is a good time if someone's probably missed out on some of these names, and this is perhaps a good time to re-enter. Now, something like a Hindustan Aeronautics, if you see it's gone into a bit of a consolidation phase. I don't see any structural change or structural damage here. This is perhaps just some consolidation after a sharp run that we've seen. So, if one does believe the story around the defense names, I think HAL is a good starting point. This stock will perhaps start seeing some, bump up again, in a couple of weeks to come. So this is one stock that you should, for sure have on your radar. But some of the other names, the ones like, GRSE and all, they've also started they've started going into a bit of a consolidation mode. So I'll have these two stocks on my radar at least, from the fact that now they are trading slightly cheaper, they're off their highs, and my risk reward is that much more favorable. So GRSE and HAL are these two stocks that I have on my radar. One momentum pick, which is as I said, it's a momentum pick, so you just have to be a little cautious with your risk management, is Cochin Shipyard. This stock didn't really participate for the longest time in the up run in the entire space, but once it did, and it had a bit of catching up to do, it did give those kind of sharp moves. Now the structure is seeming very similar to as I said, HAL and GRSE. Consolidation is on, but these are some of the names that I would have. Cochin Shipyard more from a momentum perspective.
And Vinit, we'll let you go on that note. Thank you so much for joining us this Monday afternoon.